Without further ado, let's start the webinar. For this session, we have Tomoyuki Misumi to share his insights on the Japanese market. Without further ado, let's welcome Misumi. Take it away.
Good afternoon, everyone. This is Tomoyuki Misumi, a research analyst of Phillip Securities Japan. Today, I will show you the last 12 months Japanese market and also about the prospective stocks, picks, and strategy for getting the opportunity for net investment in Japan market. Let's go on to the slides. Well, the current today one is that the contents is first I have to talk about some impact of earthquake. The second is Japanese politics and monetary policy, and the next sector return. It talk about the how the Japanese sector sector moves on the last 12 months, and also how which sector perform well and which perform worst. And fourth, the performance evaluation in last 2Q23 and 3Q 2023. I talk about the model portfolios and how these portfolio perform well and bad in the last 12 months. If you start investing in the first quarter of the 2023, how much you can gain and or how much you can lose. And next stock picks a new portfolio. I contract a new portfolio for getting opportunity for 2024, and then I'll show you some conclusion and implication. The first one is impact of earthquake. You may surprised by the January 1st news that Japan hit the earthquake hit Japan. Northwest peninsula of Japanese peninsula in Japan, and it's a very devastating and serious damages. But it's compared to the 2011. You remember that the North Pacific region of Japan are hit by the earthquake and also by the large tsunamis. It's more devastated, and compared to this one, there's an impact of Japanese companies. There's a lot of factories and subsidiary offices in the large cap stocks. Toshiba is also real estate. Murata, Seisakusho, Ricoh, Kokusai is a memory company, and Japan Display, Eizo have a headquarters in these areas, and Nihon Gaisi NZK Insulator is also have the is a factory and offices. Fujitsu. There's a sorry, I read the figures, but there's a factory with few damages. There's also clean room. So the Murata actually is a more serious one, but the William factory damage but start operation at fast 11s. There's a operation time limited, but I think that within 1 quarter, all company recover operation in a normal way, and in summary, there's a damage is all recoverable. Next one is Japan politics and monetary policy. I think that the currency perspective is serious concerns for many guys of investors of the outside Japan. So the first Japan politics. Liberal Democratic Party is a party that having their dominant position of the parliament, and Kishida is the prime minister. Its government approval is increasing you can see that in the average, 55% of the kids' government disapproval and approval is 29%. The rest one is no interest, less interested in politics or don't have the opinion. And the Liberal Democratic Party approval is also decreasing in the average on 34%. And December 23 census was 30% lower, historical lowest. It's obvious that the other party take the dominance in the Japanese parliament, but the effectiveness of the their impact of the less strong, and also there in Japan, and it is affected by some scandals of the tax scandal about the some party for collecting money. So this makes it difficult for Japanese government to take some changes of the taxation, and also have some social reforms. Next one is that the BOJ weather trending remarks. In last week, 2023 November, Weather say that the challenging remarks. He said that the monetary policy will be further challenging from the next year and 2020 next year in 2023 and beginning of next year 2024. These remarks took by the market that the policy change is upcoming and termination of negative interest rate policy is assured within 1 month, but in the end it turned out to be no actions. They only say that it's only about their only about kids. Sorry. Okay, let's talk about the currency impact. So by these remarks, Japan hit the weakest against the USD and SDG as Singapore dollar, also same shape, but wicket tapped in the weakest from the turned out to be stronger and from these remarks. But right now it's go back to it 145 Japanese yen against USD. So this is because the Japanese monetary policy is no less changing. It's unlikely to change so far or within those 1 quarter. And he continued the monetary easing. And USD is also US is also strong in inflation. So it's likely the Japan JPY weakening trend is not changing so far. So I have to say about some confusing figure on BOJ monetary policy. Many guys think that the issue of BOJ is turned out to be monetary tightening is not true, because the end of the quantitative easing is one step. And before this step, we have to remember the legacy of Croda BOJ. Yield curve control is a notorious one, but it's the targeting yield curve is widening, so it's no longer effective. But the framework is still we still having the framework. And negative interest rate, say the in bank reserve for BOJ, there's a negative interest rate, and any bank or financial institution that have the BOJ account have to pay interest for some portion of their reserves. And quantitative easing, large purchase of JGB and ETF REIT purchase is is also a large quantitative easing and actually non-effective. The interest rate policy is a third layer that hardly removed. After removing all these layers, we turn out to be a rising interest rate. So the next one is so market index and sector return. So in choosing the index, seeing the index performance, how topics on Nikkei 225 perform in last 12 months. And topic core is the 30 selected large cap of the topic index. And STI is the threat time index of Singapore. S&P 500 in the US. You can see that over the year, topics on Nikkei is overperformed the US, both STI and the S&P 500. Topics are relatively middle one, and Nikkei 225 is a better perform. Difference is topic and Nikkei is that the topic based on the market cap of each index, its constituent company, and Nikkei 205 depends on the price of each stock. So the relatively fair index is topic. So in the performance, you see the index performance of each. How annual return is that the topics is 90.6%, and Nikkei is 225%. And see that the S&P, sorry, S&P is 80.3%, and the STI is negative. So this is annualized average return. It might be somehow different from the actually observed ones, but in these last 246 trading days, where you can see that there's a different movements. It's inconsistent movement is like 1 quarter, there's a small gain in the topics, but it turned out to be a very large gain in the 2 quarter. And three quarter is stagnant. And fourth quarter is also stagnant. Last 3 months, it's starting from starting the investment in the third quarter is a negative return. And starting from the second quarter, you can gain the very good returns. The annual risk is that standard deviation of each index, return of each index, and Sharpe ratio is much better. It's better than S&P 500. But you can see that the topics on Nikkei and Japan market is riskier than S&P and also by more than STI. So you have to think that the investment in Japan is riskier than you invest in the US and Singapore. So the sector constitution of the topics, there's 17 indexes that represent the 33 TSE Tokyo Stock Exchange sectors. And 33 TSE sectors reduced into the 70 sector indexes. And this is some of the market cap of these 70 indexes is almost equivalent to the topics market cap. So you can see that the IT service is the largest one, but there is inconsistently includes a lot of services that are not related to the information technology. Electronic appliances is also second biggest one. It's because there's also included in the semiconductor industries. And the automobile, the most famous company is a Toyota. It's included as it's no longer the biggest market cap Japanese company. And material and chemicals is also important. And this is also related to silicon semiconductor industries. Next one. There's a how is each sector perform and what the sectors perform bad. Highest performer is wholesales. 36% return in the 12 months. Energy resources, automobile, electricity and gas, metal. If you search for more study about these companies, you find that these companies are low PBR, price book ratio, and always about less than 1.0. It's easily findable. And lowest performer is pharmaceutical, IT service, and retail. So why these companies perform well is because why these wholesale companies are so better is because of the purchase by the Warren Buffett, and also directive by the Tokyo Stock Exchange to the low PBR company that they enlist their disclosure and also try to the capital structure and also direct them that try to more liquidate their non-core businesses or non-business assets and more efficient capital structure. And also the lowest performer is logistics and real estate. This is always a profitable one, and so it's created by some Tokyo Stock Exchange directives. And the highest return versus risk, there's a Sharpe ratio, and there's a risk efficiency of the return. Construction was very good. It's also related to the TNC factory construction. Wholesales and electricity and gas, automobile, it's a better Sharpe ratio. Next one. Seeing the quote decompose this return performance in each quarters. In the first quarter, steel and metals, electric appliances, machinery, these are related to the silicon semiconductor industry. And in second quarter, the commercial and wholesale trade, this is because in the second quarter of last year, the Tokyo Stock Exchange released the directive to the non-efficient below book value company to change their values. So, and also have by the purchase of the Warren Buffett also enhance this return of the commercial and wholesale trade. And third quarter is energy resources and finance bank. This and return of the bank is also by the possible change of the BOJ monetary policy and the automobile transportation. And fourth one is also return to the more concentration of the silicon semiconductor industries. The worst performer is finance, but it also turned to be bad in the fourth quarters. Okay, next one. Sector correlation. How is sector correlated each other? The 6.5 among asset heavy. The correlation is strong. It's very strong, above 6.5. I mean that the correlation. I mean that 0.65 among asset heavy sectors, appliances, machinery, automobile. It's also related to the silicon semiconductor industries. IT and other service not correlated with semiconductor rates. It is not only correlated with semiconductor rates, but also with retail wholesales. Real estate also correlated with these companies. Bank, non-bank, and electricity and gas, logistics are relatively less correlated with other sectors. So if you try to construct the diversified portfolio, you can choose one of them for the strategic holdings for risk diversification. So in Japan, what kind of companies are related to silicon semiconductor industries? In 2023, there's a release of the ChatGPT and generative AI enhance the some prospects for the more silicon semiconductor industry, making silicon semiconductor industry more prospective. And some companies are cross-related to this company. And Japan is strong in these devices, instruments, and components and materials. Redatech is one of them. Urban and Acretech, Tokyo Semis. And there's a materials, CES and Sumiko is one of them. And some gas chemicals, ultra pure water is also one of the crucial components. So investment issue on the SSI, there's some similar for production of chip, silicon semiconductor chips. Logic, power chip, and IP. Logic and power chip. I mean that there's two kind of chips. The logic is a smartphone and some personal computer, and also about the some GPU and CPUs. And power chip is about some application specific one, like automobile and some electric appliances of and in this field, IP and fabless vendor is very important. You know that the ARM in the England is one of the IP provider, and your smartphone have in your smartphone there are the ARM cores for like some MediaTek's ARM core chip that subside, and this ARM, the ARM Holdings is the subsidiary of SoftBank Group, and SocialNext is the fabless vendor of the ASICs. ASIC means the application specific silicon chip, and this is having dominant position in the automobile power chip. Also about the production process. Front end, the die shrinkage. Die shrinkage is a kind of technology that the widest of its circuit is not making its circuit narrow and tinier and tinier in a microscopic scale. The current advanced one is 3 nanometer, and 2 nanometer is upcoming. It's tinier than the 40 nanometer of the smallest viruses. And in this field, EUV lithography is important. And the appliances for devices for EUV lithography is provided by ASML of the Dutch company. And testing of this photo mask created by EUV lithography is the Lasertech. Lasertech is very important. Silicon wafer producer dieting polishing is also an important one, and Disco and CS Chemical. Disco is a grinding and polishing devices company, and CS Chemical is silicon wafer, and Simco is also a several photomics for the photomask, and Redatech is, as I said last, that it's a testing devices for the EUV lithography photomask. Backend is a second important one. Packing assembly heterogeneous integration of layering die. It's called chiplet. It's a kind of technology that the number of die and chips are layered in the 3-dimensional scale, and increase the density of the of the chip is. The chip is one of technology that I mean that the EUV lithography is very energy consuming and also dominated by the ASML. This is very expensive technology, but chiplet is relatively cheaper and less consuming energy. And Tokyo Semis, Urban Test, Tokyo Electron, Eviden, and Tower are the primary company and supply the devices for the TSMC. Next one. So performance evaluation of the my model portfolio on the last quarters. So my first model portfolio I call the generation 1. And this company is like that. Zozo in the retail company, Chua Pharma, the pharmaceutical company of the antibiotics. Nintendo, everyone knows the gaming company, and also USS. USS is a car auction company in Japan. Tokyo Semis is electronic appliances for the silicon semiconductor industry. Denko Kosho is a non-bank financial company that provides the guaranteeing of the housing loan. Sankyo is amusement machinery suppliers. Gag.com is a kind of the platformer of the searching for the prices of the restaurant and some shopping sites. And this perspective is that at the first January price, and the target price is right here, and the target return is some of the target return is negative, and in the 2023 12-month return was like that. One of the Kag.com is only show the negative return, but the rest of them is very spectacular. And Nintendo is also hit the highest prices since their initial listing. Model portfolio return. If you start to invest in the first quarter of this portfolio, the first value is at this 3.3 million JPY, and then the other unit purchases. The unit purchases if you want to invest in Japan, you have to purchase at least 100 unit stock. So in model portfolio, I consider model portfolio within 5 million JPYs for retail investors. And here you can gain that 4.5 million at the end of the 2023. And there's the return metrics. At first, only a 1.81 percentage point return in the first quarter. It turned out to be a 15.35 very spectacular return in the second quarter, right at the end of the third quarters. And this return is only a quarterly one, and cumulative return is like that. And the third quarter is stagnant season, and in the fourth quarter it's rebound, and it turned out to be very spectacular one. The last 6 months, if you start investing the first of the third quarter, beginning of the first third quarter, you can gain the 16.23% return. And if you start to invest in the beginning of the second quarter, you can gain a 34.68%. And 12-month total return is 38.43%, very spectacular returns. And how these constituent company contribute is the return. And this is red one and blue one, and this is outer percentage figure is its absolute return of its stock, and this inside figure is the return weighted by the portfolio weight. Mean that it's time the 111.67% return times the portfolio weight, it would be a 30.81% return. And some of them turn out to be 35% spectacular return on the portfolios. And second generation, I saw non-performing figure of the first generation portfolio in the third quarter presentation. I construct the second generation portfolios, and by more exposure to the semiconductor industries, yeah, eliminating Cog.com and also Sankyo, and adding the plus alpha CS chemicals and Advantest. And this last 12 months return is like that. Olympus is not good at good return, and because this reflect and the Olympus provides the appliances for the medicals and also about the displays, and displays and medicals now in declining trend. So this reflecting these figures, it cannot be negative returns. Nintendo is very spectacular return, but the target return is negative. Okay, and second generation portfolio is also good, and it's 3.8 million investment. It turned out to be 4.6 million. But return figure is less attractive than the first generation portfolios. And there's in the third quarter, because of the stagnant return of the semiconductor industries, it's negative return, but it turned out to be positive in the fourth quarter. Let's move on. So the contribution is different. I also get some exposure to Advantest CS chemical, but its unit stock was expensive at that time, so the exposure is small. So there's a very spectacular absolute return of its stock, but only gained 7% in figures. Next one. Also, there's a overall assessment of the indexes. The topics Nikkei and S&P comparison of the topics Nikkei and S&P 500. It seems that in the first quarter, portfolio Gen 1 is underperformed three of them, but portfolio Gen 1, then second is overperformed these indexes. But in portfolio Gen in the second quarter, it turned out to be the fourth generation 1 is the winners, and second portfolio Gen 2 is also show a spectacular return, but lower than the Nikkei and topics. And portfolio Gen 1 is better performed in the Nikkei and S&P, but beaten by the topics. Portfolio Gen 2 is not good. The portfolio Gen 1 is turned out to be more positive than the topics and the Nikkei 225. A portfolio Gen 2 also gain return, but less spectacular than the portfolio Gen 1. And annualized risk is higher in the portfolio Gen 2. And Sharpe ratio, it's very spectacular Sharpe ratio of the portfolio Gen 1. But portfolio Gen 2 is less than the topics and Nikkei. So in comparison, the higher exposure of semiconductor-related industry progressed in three quarters. For unfavorable financial result because inventory adjustment phases of semiconductor industry. Also, you can also see that TSMC's financial result is not good for last 12 months because the some reverse from the good financial result of the 2022, and also affected by the coronaviruses. So I have to construct a new portfolio and new stock picks, and this opportunity. But so the semiconductor industry is in adjustment phase in the last 12 months, but it's ready for rebound for more spectacular result of the upcoming 2024, and also some background of the generative AI and rebound of the some smartphones, and also have some devices and edge and computational advancement of the edge computing. Okay, next one. So our investment goal is, so let's talking about again about our investment goal. I'm really care about the investment suitability of the Singapore retail investors. So you have the opportunity to invest in a US stock, and also some budget constraints for each household. So in order to achieve this investment suitability, what diversified portfolio to mitigate risk, right? A long-term investment return beating the index is also important. Risk return efficiency is at least 1.0 ratio is also important. So investment universe is that the English disclosure availability, one of the important one, is not discriminate the foreigners, foreign investors. So simultaneous financial results disclosure is must. Material public information is also available in the same day. And tradable scale affordability price is also important. Over 30 billion JPY market cap is enough liquidity to trade. And the unit price under 1 million JPY is also important for fractional investment adjustment, and also purchase affordable and easy to dispose. And profitability, financial results are also important. Profitability and capital return. Gross profit must be at least 30%, about 30%, or the operating profit margin is 20% above. If the especially the gross profit margin is comparable internationally, in Japan, in Japanese company, many companies take the Japanese generally accepted accounting principles, but in the revenue recognition, it's relatively similar. It's more cross-related to the more similarity in the IFRS. So revenue internationally comparable. So, and ROIC, return on invested capital versus weighted average cost of capital, there's a spread, and spread mean the excess return of the investors and the bondholders. It's spread more than 5% is also important. So investment constraint is under 5 million Japanese yen budget. Discretionary, but each investment allocation is almost equal, is preferable. And no rebalances, keeping initial investment purchase, no short sale and leverage purchase, so that you can choose by your, you can purchase any stock. Yeah, you can invest by what you afford, what you can own by your affordable monies. Sorry. So other consideration stock pick, multi-analyst coverage, at least 3 coverage are available for getting target price. And applying the BB Bloomberg median price or Bloomberg target prices, and return from the January 1st prices exceed around 5%. Absolute value of return of lowest target price does not exceed the return by the highest target price. I mean that the lowest negative return will be within the widest of the highest target return prices. So the taking so it's worth taking a risk. Attractive constant average growth rate of the range over 4 years. I think it must be the double digit. So sector diversification is also preferable. My stock pick is like that. Social Next is a fabless chip vendors, Urban Tests, Zenko Kosho, Capcom, Plus Consulting, and CS Chemicals are from portfolio generation second. Fujimi completed and Pepti Dream is and Social Next newest one, a new one. And this work spread is more than 5% gross profit margin and more than 30%. Social Next is exceptionally low operating profit margin, but I think there is a potential that exceed more than 20%. And the other figure is very attractive. Sorry. And its stock perspectives like that. Okay, at current, the first opening price of the January 4th was that it's like that. Bloomberg target price. This is a lower of the target Bloomberg estimated target price or the Bloomberg consensus median price. A target price return is almost most of the target return double digit except the Zenko Kosho and CS Chemical. I think that CS Chemical is very conservative, and I think there's more potential for upside is, and high minus low is that very attractive in the one widest. So I think that highest return exceed the lowest negative returns. And portfolio diversification is like that. Sorry. You see that except the Advantage and sorry, Advantage and Fujimi. So the 0.5 correlation, 0.5 correlation, but most of them were within under the 0.5 correlations. And portfolio construction estimation. This is unit purchase is here. Most of purchase is 200, 100, and fifth dream is 400 because unit purchase was cheaper than other one. And initial investment, most of initial investment is within the around of 50,000, 500,000 JPY, but some concentration of the Capcom. And target return is like that. Growth driver is Pepti Dream, and very expected is that the 4.8 million initial investment turned out to be 6 million. And the historical simulation is that 23% portfolio risk against 60% return, and Sharpe ratio is inefficient in the historical simulation. But in the 2024 target simulation is that the port risk is 23% against the 25% port return. Sharpe ratio is 1.09. I see that it's less attractive than the first generation portfolio. But here it's a case that's investing with a single purchase. Attractive 25 portfolio return is offset by high risk. So return structure difference of the model port. There's a difference in the return structure of the 2023 historical and 2024 target. It's really difficult to compatible with the historical good return historical and also estimated 24 target return is completely different figures. So in order to gain the more estimated target return, I'll choose the estimated one to be more efficient. And social next is one of the key formula spend of silicon chip, especially for ASIC. Application specific chips for the like automobile and any appliances. They're the potential key players of edge computing for robotics and autonomous driving vehicle. And there's a revenue and gross profit is very spectacular estimation, and also result is very good. And but it's a non-dividend paying company, and the price is very volatile. You see that some analysts say that some such robotics and automobile chip making taking time to be applicable in real businesses. Avantes is also prospective company. So you can see that the targeted financial result is decreasing compared to the March 2023 because of the conservative figure of the because of the inventory adjustment phases of the 2023. So the estimated next financial result is lower than the 23, but the upside potential for the next 2025. And the Advantest is one of the TMC related electronic appliances providers. It's cross-related packaging process of chiplet making. And return figure is like that. The performance against topic is like that. It's much better than topics. And Tengo Kosho is the loan guarantor of the non-bank loan guarantor of the housing loan. It's a strong operational efficiency, and dividend payout ratios are also attractive. 2.6% dividend yield also attractive, but less room for price growth. It's underperformed in the top than topics, even though it exceeds the positive returns. This is a strategic holdings for risk diversification of the its company, the portfolios. The Capcom, it's a strong gaming company. It's one of the gaming contents and amusement machine provider. Its strong intellectual property of gaming contents can be both risk mitigation and growth potential. So it's also volatile company. And its estimated financial result is also show a growth of the both revenue and also net incomes. And also it's also a dividend paying company. Payout ratio is attractive, 36.1%. Next one. Plus Alpha Consulting is a system solution provider for human resources of its enterprises. Relatively new growth style holding company. Growth style company to hold in the portfolios. It's one of the potential application layer player of artificial intelligence. It's also very volatile, and by the second quarter, end of the second quarter, it's performed better than topic, but from the in the third quarter to fourth quarter, it performed bad but there's potential for rebound and exceeding the topic with performance. So price revenue growth is estimated, but some income profit reduction is also expected. Phillip Incorporate, this is one of silicon wafer slicing and polishing appliance provider, and also supply the slurry. This is a polishing. Slurry is one kind of the liquid for polishing the silicon wafers. there's also product mix of it's not only limited to the silicon wafer related product. There's a product mix to mitigate the operational risk. It's also strategic folding for growth style. So its estimated revenue and the net income is declining, but there's also a high potential for semiconductor industries. PeptiDream is a pharmaceutical companies applying the amylopeptide science application on the pharmaceuticals. It's a strategic folding for rebound of pharmaceuticals and also for portfolio diversifications. PeptiDream is underperform topics and also price is declining, but this reflects the underperformance of the pharmaceutical companies, but there's a potential for rebound. As it's not dividend paying company, and it's a strategic alternative for the Chugai farm in the first generation portfolios. CS Chemical is continued from the second generation portfolio. This is the largest global silicon wafer suppliers. It means the material was silicon. The product mix of the materials and the chemical, there's a product mix and mitigate silicon cycle risk. The product mix. So if the company have a product mix, operating margin is sometimes worsened because of some cost of operation is cost of selling and marketing cost is increased, but this company show a very good operating margin, and so the estimated financial result is declining, but because of the inventory adjustment phase of the semiconductor industries, but there's upside potential, and there's also dominant player of the silicon wafer also strong, also have potential for strong rebound. It's also dividend paying, and payout ratio is nice to 20.8%. So conclusion that the ambiguous BOJ policy may confuse bank earning perspective. So I would avoid to choose the banking company and banking company, but instead choosing non-bank financial institution that have the good operational efficiencies. Earthquake damage is severe, but less harder than 3.11 earthquake. And company damage is recoverable within this quarter. Because semiconductor industry is still growth driver and expected to be rebound from the stagnation of the late 2023. Pharma company is also potential rebounder. TSE, Tokyo Stock Exchange directive for English disclosure widen our investment universe. And commitment for low PBR company may foster more capital inflows from both domestic investment and from the foreign investment. Thank you for listening.